Well, there has been little to stop this stock market surge. A hot summer outside and on the markets, with the S&P 500 poised to continue its winning ways. And of course, we've talked about this record run for the Canadian stock market as well. Let's talk about some of the driving factors now with Jonathan Corpina. He's Senior Managing Partner at Meridian Equity Partners. Jonathan, one of our longtime guests, and it's great to get his perspective from the floor of the big board. What has the mood been like, Jonathan, of late?
Good morning. Yeah, as we're getting through the summer months here and as it's coming to an end, we certainly are feeling the euphoria in the market as it continues to trade higher and higher. We're continually watching the headlines to see, what is the next catalyst that's going to either support this market or give it a reason to pull back. But at this point right now, we've gotten through earnings season, and earnings season historically has been a support for the market, and we continue to see that now, considering the outlook that we've received from many of the companies moving forward have been somewhat positive. Our economic data is supporting this move in the market, and I think overall the market is pricing in a Fed cut come September. How much they move at that point and what the comments will be during that meeting will be very interesting. But all indications as of now is that the White House is going to get what they've been asking for quite some time, and we will get a cut in September. So I think couple all of that together, that's gotten our markets collectively to these all-time highs, and it's just a question of how long we can stay up here. We're going to continue to see some volatility in our markets. We're going to continue to see a pullback at some point, but I don't think it's going to be anything significantly dramatic to have an overall impact on what the Fed's decision would be come September.
Okay, and we've got a number of additional economic data points to chew on as we roll through the week. More inflation-related numbers, more retail sales. We'll see what that informs the market of when it comes to the rate cut possibility. What about the trade story? I think that given the rally we have seen since so-called Liberation Day and a general belief in the markets that the trade story is not as bad as some feared. I know up here in Canada, obviously, we're still not sure what the trading relationship with the U.S. is going to look like. But do you think that earnings season, at the very least, and some of the messaging from companies helped to appease investors who were worried about that?
Yeah, I think there's still so many unknowns about how the trade issue is going to play out. And I think if you go back 2-3 months ago, even longer, any headline discussing trade, tariffs, negotiations really moved our markets. I think we've kind of moved on from it now because we've gotten so many pauses, we've gotten so many delays, we've gotten so many times the goal line has been moved down the field. So at this point right now, that the impact of the trade headline isn't similar to the impact that it had 3-6 months ago on our overall market. That will play out in time. We'll continue to get those headlines. The White House is looking for some big wins on that. We haven't gotten the big headlines from that just yet that I think that they were hoping for. But we're going to continue to watch that and monitor that. And keep in mind, when these trade headlines come out, there's still a delayed reaction to that, right? How is the economy going to react to that? How is our economy going to be impacted by that? How's our Main Street citizens going to be impacted by that? So there is somewhat of a delay to the impact of tariffs and trade. But I think for now, the sentiment and the overall focus of our investors in our market has shifted away from trade, and it's not bearing as much of a weight as it has before in the past, focusing more on interest rates and what the Fed is going to do. So
against that backdrop, what do you make of the fact that stocks themselves have had just this incredible move these last couple of years? The S&P has rallied back in a big way this year, so it's now up in the neighborhood of 10% for 2025. But that's coming out 2 back-to-back years where it had advanced more than 20%. You've been through a lot of different market cycles. What do you make of this current bull run when it comes to the charts?
Yeah, I think when you take a step back and look at where we've been and where we are and where we're potentially going, I think overall, if you look at the current administration that we have in the White House, pro-business, pro-expansion, and I think that overall mentality has helped our market. You go back to the prior administration, when President Biden was coming to the end of his terms, the fact that he wasn't running again, knowing that there was going to be a new person in the White House, I think that also added to a lot of the uptick and upswing that we've seen in our markets here. And overall, we're not talking about trading, we're talking about investing. When investing in the market, look at a long-term picture, look at 5 years, 10 years, 20 years. The market continues to always move higher. We've been through financial crisis, we've been through Brexit, we've been through global pandemics where the entire world was shut down. If you didn't think that was the time to sell the market, you were, that was the right move at that point, not knowing how this would play out. But then the market always rebounds from something, like that. The market is stronger than the headlines that are out there. So I think we're going to continue to see that. It's been 2 steps forward, 1 step back. That mentality, that motion will certainly continue.
All right. Now, just in terms of the ebbs and flows of the market, even if the momentum remains largely bullish, can you just remind our audience, we're sitting here, it's almost mid-August, can't believe I'm saying that, but a lot of our guests recently have been sort of alluding to the fact that once we get through the second quarter earnings period, there's some historical data suggesting sometimes you enter in like an annual soft patch for stocks, whether you want to sort of put that on September or maybe into October or add the back half of August. Again, we're not seeing that sentiment right now, and even last year we didn't really see that materialize in August or September. But can you just remind us of the rhythms of the market at this time of the year heading into the fall, what typically happens?
Yeah, certainly. Historically, what we've seen is as you get towards the end of August, markets become a little bit more volatile as there's less liquidity that are in our markets that can cause markets to swing, and there's a lot less volume to dampen those moves. When you start to get in the fall, historically, we have seen that there has been some softness that we get through September into October, and then as you get towards the end of the year, it's money that's been waiting to come into the market, being forced into the market as we get towards the end of the year. That's money on the sidelines that come in. We certainly look at that. We certainly look at those patterns. But then the ancillary factors, once you pull those in, this September is going to be quite different than last September, right? Last September, we were, heading towards the election and the momentum that was going there between the different candidates and how that was going to play out. So it's all different. I'd love to look back at history and say this is how things traded and that trend will continue. But looking at where we are today, interest rates where they are, geopolitical issues, risks, and concerns that continue to be there in our markets. The continuing fight between the Fed and the White House and the positioning there, trade deals and trade talks and tariffs. This August, September, October is going to look quite different than last year. I think some of the patterns might be there, but I think the headlines are quite different, which will make our markets trade in a different pattern.
Okay, Jonathan, always appreciate your insight. Thanks so much. We'll let you get back to it on the floor of the New York Stock Exchange.
Thank
Jonathan
you.
Corpina,